Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 15th, 2025. I am Nova.
I am Satoshi.
Above $119,000. Today, we're taking a deep dive into what's truly fueling this historic surge and, uncovering the essential insights you need to navigate this incredibly dynamic crypto landscape. Let's unpack this.
Absolutely. And it's really not just Bitcoin leading the charge, is it? We're seeing this broad market rally. I mean, Ethereum nearing $3,000, BNB at $692, Solana holding strong at $164, XRP jumping up to $2.87, and even the meme coins are getting in on it. Dogecoin, Shiba Inu, Pepe, Bonk, even Dogwifhat seeing these big spikes. But it's really fascinating here, I think, is the underlying dynamic in market sentiment. It tells a surprising story.
That sentiment, yeah, it's a curious case, isn't it? The crypto fear and greed index just slammed into extreme greed at 79. Now, on the surface, that screams retail FOMO, right? Fear of missing out. Are we seeing the everyday investor just piling in?
You'd think so, wouldn't you? That's what you'd expect. But that's precisely where the data tells a fascinating and kind of counterintuitive story. Despite Bitcoin hitting these consecutive all-time highs, Google searches for Bitcoin surprisingly muted. Retail interest, it seems like it's almost nowhere to be found yet, which is different.
Really? So it's not the usual pattern then?
Not like past bull runs, no. Those were often fueled by that mainstream hype, Yeah, this rally seems built on a bedrock of massive institutional capital. We're talking over $1 billion pouring into spot Bitcoin ETFs. Those funds that make it easy for traditional investors to get direct exposure.
$1 billion just on Thursday and Friday.
It's just those 2 days, yeah. So this suggests a more sophisticated, maybe more stable foundation for the rally. It kind of fundamentally changes how we view this market's momentum. And look, if retail FOMO does eventually kick in on top of this, well, there could be even more upside.
Okay, interesting. So institutions are key right now. Let's zoom out a bit then. How are the major global currents, economic policy, political shifts, trade tensions, how are they impacting crypto? Let's start with the Bank of England. Governor Andrew Bailey just warned commercial banks against issuing their own stablecoins. Prefers tokenized deposits, pushes back on CBDCs. What's the read there?
Yeah, that's a pretty strong regulatory signal. It could mean potential hurdles, maybe higher compliance costs for GBP and EOR stablecoins down the line. But interestingly, if confidence in those traditional fiat-linked tokens wavers because of this kind of regulation, it could actually benefit decentralized USD stablecoins. And it definitely strengthens Bitcoin's safe haven narrative as a truly independent asset.
Right. Independent is key. Okay, from economic policy, let's pivot to politics. Specifically, a bit of a storm brewing in the U.S. White House economic advisor Kevin Hassett talking about potentially firing Fed Chair Jerome Powell over a budget overrun for the Fed building renovation. Seems dramatic.
It does sound dramatic, yeah. But it's more than just political theater. It really highlights Bitcoin's core value proposition, doesn't it?
Yeah.
As a decentralized asset. I mean, the mere hint of firing the Fed chair. It amplifies speculation that U.S. monetary policy could become more politicized. Maybe leading to faster rate cuts for political reasons.
So implications for Fed independence.
Exactly. And for you, the listener, when questions like these arise about the independence of traditional monetary institutions, well, Bitcoin's appeal is that sovereign digital gold, a hedge against politicized policy. It just intensifies. It's like a real-world stress test for its original thesis.
Got it. And finally, on the global stage, those escalating US-EU trade tensions. The EU is delaying retaliation, but President Trump is vowing 30% tariffs by August 1st if no deal is reached.
Yeah, this renewed rhetoric is definitely stoking inflation fears and potential market turbulence. Tariffs are, they're inherently inflationary, right? They drive up prices. And a hefty 30% duty, that would certainly impact consumer costs. So Bitcoin's anti-inflation hedge narrative plays out strongly here. Investors might look for scarce, independent assets if trade wars spur what some call bad inflation.
Okay, so macro headwinds are definitely something to watch, but it's not all caution, is it? There's a major legislative tailwind potentially brewing in Washington. Let's talk Crypto Week in the U.S. House. What key bills are up for votes?
Yeah, this week is actually huge for crypto legislation. Lawmakers are set to vote on 3 major bills. First, there's the Digital Asset Market Clarity Act, the Clarity Act. It aims to define crypto regulation, sort out whether the SEC or the CFTC oversees various tokens. Crucial clarity. Second, the Genius Act. This sets up a federal framework for stablecoins mandating 1.1 reserve backing. That one already passed the Senate, actually. Expected to be the first U.S. law on stablecoins.
First U.S. law. Wow. Okay. And the third?
The third is the Anti-CBDC Surveillance State Act. basically proposes banning a retail central bank digital currency.
And you mentioned bipartisan support for these. That feels significant, almost rare these days. What does that signal?
It signals a major push towards regulatory certainty, and that's arguably the biggest catalyst needed for mainstream adoption and, more institutional investment. It could create a much more welcoming environment, finally provide those clear rules of the road the industry's been asking for.
Rules of the road, right? Good way to put it. Okay, let's quickly spotlight an altcoin that's been absolutely tearing it up, XRP.
Yes, XRP. It soared, was it 25.7% in just 1 week? Pretty remarkable. And this explosive rally, it's largely because ProShares launched the world's first XRP futures ETF. It just started trading this morning, actually.
That is huge. So why does this matter for you, our listener? What's the takeaway?
Well, it really reflects increasing Wall Street acceptance for diversified crypto assets, going well beyond just Bitcoin and Ethereum. It basically opens the door for new institutional money to potentially flow into a wider range of tokens. Suggests a maturing market where more assets are getting that traditional finance validation.
Okay, so let's bring it all together. The market is overwhelmingly bullish right now, clearly. Bitcoin's leading the charge, potential regulatory clarity on the horizon. But we have to remember the extreme greed reading we talked about earlier and the potential for volatility that always comes with such rapid gains.
Precisely. Couldn't agree more. While the momentum is undeniably positive, prudence remains absolutely key. You really need to keep a close eye on those crypto week votes in Washington, see how they shake out, and watch how the unfolding Fed drama and those global trade war sagas play out too. These macro events will heavily influence the market's next direction, no doubt.
So the final thought for you today, in this environment of surging prices and these shifting macro currents, how do you make sure your investment decisions align with your own personal risk tolerance? And maybe how can you best prepare for sudden changes in market sentiment? Something to think about as you navigate these pretty exciting times. Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.